All right. Welcome back, listeners, to the Financial Decapitation podcast. My name is Mike. We're going to go ahead and do the introductions again this week for episode 3, just in case you didn't hear episode 1 and 2. If you haven't, get a chance to revisit those, but thank you for listening in on 3. Just to reiterate, my name is Mike. I'm a financial analysis and theoretical economics major from Cal State Northridge. Doing a lot of valuation, stock analysis, that type of such. I'm joined today by our co-hosts, Peter Schmain and Sarkis Zoratsian. They'll go ahead and introduce themselves.
Hey there, listeners. I'm Sarkis. I'm a graduate from Cal State Northridge, a marketing major. And used to be a finance major myself. Know a decent amount about finance and analytics, and that's about it for me.
And my name is Peter, and I'm a mechanical engineering student and a long-time avid investor and stock trader. And I don't have a education in finance, but have been around for a bit of time now. And we have quite a bit to talk about today. I wanted to actually start off with introducing the wine and cheese that we're eating today. Let's see. So we have 3 bottles today.
Yeah, we have 3 bottles of wine. The bottle we are drinking right now is Coastal Estates Chardonnay 2017, made in California. We have a Stella Rosa, Stella Peach. It's a nice kind of bubbly, sweet wine.
That one's our favorite.
That one is really sweet, really delicious.
Yeah. That one's bomb. And then we have a Chalkboard Pinot Grigio 2017. Haven't tried that one before. Haven't tried a Pinot Grigio before, but it'll be interesting to try it out.
That bottle looks kind of... I like that label. It looks pretty cool.
Yeah, it's pretty nice.
And what kind of cheese do we have here?
And for cheese, we got 3 cheeses. We got sharp provolone. We got this jalapeno and pepperdew cheese, like cheddar, I believe it was.
Tastes like cheddar, yeah.
Yeah.
Cotton cheddar.
Yeah, cheddar and...
it's aged cheddar.
Yeah, aged cheddar. And the last one is a smoked Gouda.
That's pretty good.
And we got some crackers here as well. Yes, that's about it for the wine and cheeses.
Wine and cheese companies, if you want to sponsor us, hit us up.
And and if you are curious to see see the bottle, see what we had today, we do have an Instagram page now. And what's really nice is I know last time we left off discussing that we are going to get those social media pages up and running. This last week, we finally did. Reddit's up. We're going to be posting articles. We're going to go ahead and post a lot of different perspectives and point of views. We finally have that two-way communication that we've been really striving for since the first episode, the pilot episode. And now that it's up, we really want to see you all interact on it. Shoot us questions, comments, perspective. It's going to be really good to hear from everyone because every podcast we'll have after it, we'll get to talk about it, hear from you, and get to see what you're thinking about out there, especially when we're going over all these massive, massive topics.
So if anyone wants to get in touch with us, our email is set up. It's fdinvestmentgp@gmail.com. You can also find us on Instagram at Financial Decapitation. Same with Twitter. And we are also in the process of setting up a Discord, possibly our own server. Or
that can be done.
Yeah.
Yeah, that's easy. And the Reddit is r/financial decapitation. There's no spaces in that name.
Right. And just, and I noticed when you put our name into Google, it'll pop up like the first thing on Spotify.
Yeah.
We're going to make sure we have a lot of information on all those different pages so that you all can find us very easily just by using the search engine. But yeah, that takes care about all the administrative stuff.
Yeah, I'd love to hear people's people posting on our Reddit, especially posting articles, because if you post something interesting that catches our attention, we'll definitely talk about it the next time. I'd love to hear from other people, get their feedback. So
yeah, definitely. Today we got a decent amount of topics lined up. Peter talked earlier this week on Reddit. He had a post regarding refrigeration and cooling storage, right?
Yep, cold storage.
So go ahead. What kind of background can you provide for us? What's going on with that?
Well, cold storage, to understand what it is, first of all, you have to understand the industry. The industry is moving towards delivering food and food delivery services and like prepared meals and subscription services and that type. Over the last couple of years, they've really exploded. You see companies like let's see, forgetting the name. I think they have prepared meals and they keep them frozen for you, and then you just pay a
Blue
service.
Apron.
Blue Apron, that's the one.
There's a lot like that actually. I've noticed
I think
there's like
Blue
this
Hello
everywhere.
Fresh and yeah,
Yeah,
there's
if I recall,
popping up.
Blue Apron, I think, is a public company, are they? Regardless, anyways, so they prepare a prepared meal for you. They have it in a tray ready to go. They'll send you a box of a bunch of prepared meals, and you'll get it to your front doorstep, and you'll have meals for the next couple of days. They are a public company.
Yeah.
Interesting, and they're doing quite well for themselves, up 8.5% today. Dang, that's pretty solid.
Yeah.
So basically, you get these meals sent to your doorstep. A lot of people know about these already. A lot of people are just too lazy to go shopping or to cook. Some people just want to order groceries to the doorstep, and you don't always get food coming from the local delivery, from the local grocery store, because grocery stores can only store and save a small amount of money. Small amount of food. There's kind of limited on their inventory, on their shelf space. So the food and the groceries that they save are typically for retail customers who show up to their storefront who buy it from there. Typically, you'll get a truck delivering to your house within, say, a couple of hours, pulling from some sort of a central hub, like a storage facility. Now, being that it's food, it has to be a refrigerated storage facility. And these have started to pop up everywhere where there are big cities with delivery services. Amazon is doing their grocery thing. You have Blue Apron. You have a couple others. Peapod by Giant, Amazon Fresh, yeah. And they're starting to pop up all over the place. These cold storages are an amazing idea because, I mean, basically they're investing in real estate. Real estate is decent investment. In addition, they're investing into specialized real estate like storage, which pays consistently, and cold storage which costs more than that because it's a service. They maintain it. They have to constantly move products in and out of it. This is I think I read an article on CNBC. I posted this one on our Reddit saying they estimate that the market, about 2 or 3% of all goods on groceries are bought online. And they estimate that within the next couple of years, it'll explode to 13%. I think they mentioned over the next 5 years. And 13% of grocery sales. We're not talking pennies here. We're not talking niche industries like marijuana like we discussed last time. Every single person eats food. Period.
Yeah.
So that's quite a large industry to get such a large market share on. That's a lot of money right there. That's billions.
It makes sense, though, thinking about these delivery services, it really makes sense that they're starting to grow now of all eras. Only because, in America right now, everyone works. Everyone's busy, We're not back in the 50s and the 60s where it's one working member of the household and then one stay-at-home member. Now, both members are typically working. Kids are off at school and after school programs. You really don't have time to meal prep if you're not disciplined enough to do it. And I mean, I can admit, when it comes to cooking sometimes, I am incredibly lazy. So a service like that is like super great.
I gotta say, I think this is the first generation of people that don't cook.
Yeah, or at least not actively cook a lot. Yeah.
Not actively. Most people go out, they go to restaurants, fast food, takeout places, mom and pop spots, fancier restaurants, whatever it is. No one cooks anymore. It's
not even just eating out, it's also delivery services as well.
Yeah.
I mean, just think of Uber Eats and Postmates.
Oh, those are huge.
Yeah, you can just order whatever from whatever local restaurant or even like whatever fast food service you like, fast food restaurant you like, and you don't have to even leave the house.
This cheese is amazing. The spicy jalapeno
cheddar.
Yeah, it's really damn good. Sorry, go on.
I mean, good choice.
No, that was a very good choice. Yeah, I'm also enjoying that cheese very much. Yeah, the delivery. I mean, let's just think about, like, for us three, we play Dungeons and Dragons. We play a lot of different board games. When we're out with our group of friends, right? and we are hungry, it's a huge game delay if someone has to leave. You know, think about playing Monopoly and one of the players is in the bathroom for like 20 minutes. That sucks, right? Now imagine 3 different people going to 3 different places trying to get food. It takes even longer. But these delivery services not only cater to people who aren't cooking as much, but it caters to people who are doing things and activities in groups. You know, now before, when you wanted food delivered, you had to hire like a catering service or like a certain fee from that direct place if they delivered. But now we have all these different services that are going to deliver us pretty much anything.
Oh yeah, it's so easy.
It's crazy.
Before you'd have to go to a restaurant or make a phone call to order delivery, or you'd have to go to your kitchen, prepare something, bring something out. You literally spend maybe 30 seconds on your phone, click a few buttons, and something shows up at your doorstep. There's no time wasted at all.
Yeah. And I mean, Postmates delivers alcohol. That's a big one, too. I mean, dude, who doesn't want to just call up and get alcohol?
Didn't Uber say something about delivering groceries and other stuff? Oh, they announced something about truck services recently that I saw. You know what? While you discuss this, I'm going to pull that up, actually. That was something I just randomly remembered.
Well, I mean, tying this back to... you know, the cold storages. I'm thinking about at CSUN in the University Student Union, we have an indoor fridge there. We have cold storage on site. So, I mean, I'm pretty sure there's a lot of other businesses that utilize cold storage only because it's probably more efficient to store in just one central location that's cold and put all like your meats and frozen goods in there rather than having to have like a break room freezer. You know, you just have more space. But I mean, in terms of investment, I would probably say, yeah, there's a lot of long-term value for refrigeration. I mean, just in general. You know, I was mentioning, before the podcast started, I was talking about, like, in space. You know, everything's cold in space, and it's lifeless and stuff, but I'm pretty sure we're going to need different types of storage units while we're up there. Yeah, I'm pretty sure we're going to need some sort of artificial storage units, whether it be cold or hot or whatever. You're going to need a temperature or climate-controlled unit.
Realistically, in space, it's going to be heated.
Right. but I mean, I don't know, you know. Who knows what we need out there. But yeah, you're right. It'd probably be heated. But I'm pretty sure climate control fridges, right? Yeah. We have, cold, right? Who's to say that we're not going to create, like, a heat storage?
Yeah.
And I'm pretty sure we have, and if we don't already, cold storage companies will probably be the first to lead the way on that. Only because they have climate control research completed on their end, and they understand how the industry works. So they have that economics of scale there. The economies of scale. They're prepared to venture into like a whole other industry, or like a shift in an industry.
Well, I also think, space aside, that if you do back this industry, at worst, it defaults to its real estate value.
Right.
Because at the end of the day, storage is real estate.
Mm-hmm. Yeah.
So, I mean, it seems like a pretty solid investment. Where can you go wrong here?
I mean, where you can go wrong is a couple things. I mean, first off, you have to maintain a certain quality or like a standard.
Of course.
So, you know, like public storages in Los Angeles are everywhere.
Yeah.
Right? Mm-hmm. But there's a lot of different companies that specialize in storage. Some have climate control, some don't. Some have different size units and lots. It varies in size, it varies in amenities that they can offer.
Well, yeah, so you'll need something like easy docking for transportation purposes, for logistics purposes. You'll need variable temperature control depending on the size of quantity of storage. So if you're storing for every company in the same main room, everything has to be an average temperature. If every company has their own storage locker or a separate locker, then you have individual temperature controls with separate AC units.
Right.
Or, you know, at least vents and so on. There's a bit of variability, quality control.
Yeah.
But it doesn't seem all that complicated compared to, I don't know. And honestly, I can't even make a comparison to cold storage.
I mean, it probably isn't as complicated as like running a storefront or I shouldn't say it's not more complicated than running storefronts and those types of businesses. I'm sure there's equal weights to it because you still have financials, you still need capitalization, development, growth.
I see a much higher cost in running that sort of large cooling storage.
Higher operating expenses.
Yeah,
I guess
much higher like electricity bills.
That's true.
On your monthly.
I mean, then I guess you could argue too, though. You know, you're paying less with wages I'm assuming you're probably going to need less staff there. Maybe security is
something like that would scale decently well, because you could scale your operation without scaling your staff equally so. Because you're just kind of increasing the size of your inventory. You don't necessarily need a factory-sized, workforce to run refrigerated storage units.
That's true. Yeah,
it's the most of the stuff will just sit there, unless you're dealing with logistics itself. That's a different story. I mean, as far as storage goes.
Well, I mean, it also links back to our previous podcast in episode 2 where we were discussing like land value in California. That could also heavily affect, what type of operations you're doing, especially when you live in a state where property taxes and operating businesses on land is expensive.
Yeah, of course.
So that's going to reflect in your price. For those of you who didn't join us on episode 2, we were talking briefly about it, and just to really briefly discuss how that would work. I mean, if it was really expensive to open up this refrigeration storage place in this lot in LA, and it's really expensive, that price they're just going to translate to the consumers who are going to be using those refrigeration units. So I think that might be your biggest challenge in that sector is if someone already has a really good spot in LA that isn't as expensive, they can have lower prices, whereas you might acquire a more expensive piece of property and then you have to translate it to a higher price because there's no way you can go under or else you start taking a loss.
Yeah.
So I think that's where I think that's as complicated as that might be, other than of course capitalization and finding the business. Those things aside, I think the most difficult thing would be land. Just location. I mean, the laws of real estate. Location.
Well, that's a big deal. Yeah. Big. So you can't have, say, a cold storage facility out in the boonies in the middle of nowhere. You got to put somewhere where it's easily accessible, like a central shipping hub, where you can access quite a large span of people from that central hub. And it's so the real estate value comes into play, but it's not. It's just kind of like just a factor to consider, less than like it's going to hurt the value or something if, say, they want to go somewhere cheaper or whatever. Because even if you're in like a big city like LA, you can kind of be anywhere in the middle of LA as long as it's somewhere there. Right. You could be in like East LA, out in like, I don't know, say closer to San Bernardino, and still make your way across the city and still get to where you need to go shipping within the day. It doesn't have to be quite in the center of the city, so you can still, shoot for cheaper real estate or cheaper workforce or whatever it is.
I mean, LA, I think, is one of those like special scenarios where it's so urbanized, a metropolitan area, that you can really locate it anywhere in the city, and you're gonna have a decent radius capture rate of people, from the location, whether it be suburbia or urban areas or even rural. If you're looking at like Chatsworth and stuff, I mean, it's like rural suburbia. But yeah, I agree with you. Like, placing those anywhere in LA, you can get to one end of the city to the other and still pass millions of people in between who might still use your services. So yeah, no, I agree. Like, there's a lot of potential with that venture.
That also kind of you kind of brought a question to my mind. While LA might be like a prime spot for this, other locations like, let's say, New York. I mean, that's an island. Manhattan is its own island,
right? And
faring around kind of all the different boroughs can be quite difficult.
True.
So it kind of really depends on where that particular storage business is setting up.
Well, in that case, cold storage would become even more valuable depending on where it is, because it would be so much more difficult to come by or so much more difficult to access that when it's there, it's just that much more valuable. In my opinion.
I mean, it would also bring the question like implementation times and rollout times. Because a lot of these places, I'm assuming you're probably if you do buy like a piece of land, if it's not already developed, you're gonna have to develop it and build it. And if it is developed, you're going to have to retrofit the building to meet the specifications you need to run a...
well, not necessarily. What is a cold storage facility? It's an insulated facility that has significant amount of, industrial cooling. Right. It's not that difficult to set up an air conditioner unit, especially even if it's industrial. It doesn't matter. And most buildings are insulated. I'm pretty sure
Yeah.
That there's a standard when it comes to, you know, first world countries and insulation in their buildings. It's
Well,
kind of
yeah.
yeah, that's not really. I mean, you might want a bit of extra insulation for security, but like it's really not that complicated.
I mean, I don't think I'm discussing more on the complexity end. I think I'm thinking more on like the pricing end of having to retrofit a building. And I mean, I'm thinking at the same time, like, not your standard storage where I'm talking about, like, what if you bought a factory warehouse? Because we have those in LA, like, you know, garment factories. We have some here and there that are abandoned. If you take it in, I'm pretty sure those are older buildings. You'll have to retrofit them.
Of course, but that just comes that's part of the setup cost. Like, we have
Yeah.
large scale fridges. Like, you go to Costco and you have that one giant room somewhere off to the side that has all the vegetables and stuff. It's a giant refrigerated room.
Yeah, right.
It's really not that hard to set it up.
Yeah.
They're everywhere, and it's not like you're not inventing anything new here.
Right.
It's just a really clever idea, low cost. Considering the amount of income you'll be generating, I think it's relatively low cost and relatively efficient, easy. I don't know. I really like this idea of investing into these businesses. It's
You know, though, one thing we always have to ask ourselves when something does sound really good is you have to ask, why aren't other people doing it?
oh, they are. People are just now finding out about it, and people are jumping on the bandwagon right now.
Well, so I would say this would be a good general warning then. You know, everyone's going to do it. This is a common thing to see with like a newfound industry or when something's growing. You're going to see a lot of entrepreneurialism. You're going to see a lot of up-and-comers. But you're also going to see a majority of them get crushed. And there's only going to be like a handful that are going to survive that first wave of development. Because, you know, they're going to find something unique or something that sets them apart from the competition that just makes them more valuable. So I think that's something we're also going to see as these developments are going on with, like, you know, cold storage. You're going to see, like, all these different competitions and competitors as they grow, but a handful of them are probably going to survive. And of them, the other ones are going to get absorbed or die out. Competition is going to be ruthless. You know, there's only so much demand for these until there's no more demand, you know.
So the main one I was looking at was Americold Realty Trust. And it seems, from what I can tell, they went public January of last year around the $17 mark. And currently, right now, a year and a half later, they're around 34, 35, sub 35. And they're doing quite well for themselves, it seems like. Honestly, the graph is practically a straight line.
Yeah,
there's really minimal variance. It's pretty linear. And it looks like there's no dips or anything like that. There's no variance. There's no volatility in the stock from what it looks like.
When did it come onto the market?
Beginning of last year.
Oh, wow.
Okay, so it's pretty young. It even pays dividend, which is interesting. Has a dividend yield.
2.3%. That's what is that? That's typical, right?
Yeah, but dividends tend to be more common in companies that are already established.
Yeah.
I mean, if this is a year old, that's really early to be doing dividends. But that's actually a good thing to see, though, because if they're still growing in size, if their market cap is still increasing, and their market shares are also increasing, and they can still afford these dividends, I mean, that's phenomenal. Because very rarely do companies begin to reduce their dividend payments.
Yeah.
Because it looks very bad on investor reports when you have to reduce your dividend. So most companies never touch it, but if they already start with like a 2.33% dividend yield, I mean, that's not a bad start.
That's interesting. So just from a quick overlook, I found on search results on Google, just really quickly, revenue of March 2019, they claimed $393.2 million. Net income is minus $4.63 million, so they're losing money. Diluted EPS negative 0.03 and a net profit margin of negative 1.18%.
It's probably because they're going through the development phase right now.
Yeah,
they're going to incur losses. They're building. They're expanding. And that's something for everyone listening to understand, too, about investments is typically with young companies, they should already be developed, but there are some that enter the market with an idea or a concept that has been working or they've done research on. And as they implement it, they start to run deficits because they're expanding or they're growing, which is very common. It's very common to see that because when you're growing, you're spending money, tons of money. I mean, imagine building a storefront from the bottom up. You got to pay for the walls. You got to pay for the contractors. You got to pay for interior designers, furniture, shelving. I mean, you got to pay for all of that. And let alone you got to open up partnerships and contracts with things that you're going to sell within it. And I'm pretty sure with this type of service, it's no difference, because you're still going to have to get contractors and people to build those warehouses and then build partnerships with people to start using those warehouses.
I like the point that you made about kind of running deficits, because if you actually look at some of the large tech companies that are on the market right now, like Amazon, they haven't had a profit in a long time.
Right.
It was only very recently that they were able to turn a profit.
Right.
And that's kind of I'll say a trend in a lot of these burgeoning tech companies, where they'll be developing constantly, and they won't turn a profit or even consider dividends for a very long time.
Right.
Yeah, but see, you talk about operating at a net loss, but some companies like Amazon that you mentioned can subsidize certain parts of their company with other parts of the company to be able to take that hit. Companies like Cole that aren't quite as diversified as Amazon might not be able to do such a thing. Like, for instance, Amazon's biggest business, and you might not realize it, is cloud storage. That's something like 75 to 80% of their net income. And it's insane how much money they make from it, and the profit margin is incredible. But because of this, they can introduce things like Amazon Fresh and take a huge net loss to kill the competition, to kick the competition out of the game, because they're subsidizing one industry with another. And this way, they get rid of all the competition. Once the competition is gone, they raise their prices. They don't have to subsidize it anymore. And they're the only ones in the grocery game that are making money at this point. Now they're making money on both industries, and all the little guys are gone. Americold can't really do that sort of thing. So if they continue to run at a net loss, they're going to have to find investors or make up money somewhere, because, you're not Amazon. Not everyone is Amazon.
I mean, with cold storage, what I could see happening is a lot of vertical integration. So at some point, cold storage is going to begin going into building their own refrigerator units, or even developing their own contracting companies or umbrella companies that can build these sites into completion without needing third-party partnerships. So, I mean, I think although, running a deficit, they might run into some problems. I think in the long run, the grand scheme of things, though, these deficits have a chance to really pay off. And as with any development, you're gonna incur that loss. You just have to cross your fingers that you don't incur so bad of a loss that you completely bankrupt out.
Try not
stick to a budget.
Try not to do what Tesla did.
Yeah, and you're exactly correct, because Tesla right now, I mean, dude, I can go on a rant about Tesla for a long time. And I have nothing against their technology. I have nothing against their ideals and their prospects, because I think they're wonderful and fantastic. I just have a problem with how they're running the business, and that's the only issue. The finance and capitalization, understanding what it means to meet deadlines and not to set false deadlines, because the market will have spikes. You're going to have surges. You're going to have sell-offs. You're going to have... I mean, look at what happened when Elon Musk said the whole, the stock price is going to be at 420, we're going to go private.
Yes.
Everyone's like, hell yeah. Everyone's like, hell yeah, he's going to secure 420. I'm going to get an instant return. He's going to go private. I'm going to get my money. I'm going to cash out. And then it never happened. And then lo and behold, he gets sued. He can't be a major shareholder anymore. He got penalized.
Do you think the SEC would have fought them so hard if they did actually hit the 420 price point?
No, they wouldn't, because they kept their word. Now, now bear in mind, they can still get in trouble for insider trading.
Oh, yeah.
Because that is... See, that's the interesting part. Insider trading, a lot of people think has to be behind closed doors, and it has to be these people talking about, this is what's going on.
No, not at all.
No, a company can easily artificially inflate or deflate their stock just by saying something on the news. And if they follow through, that's still considered insider trading, because that artificial change has happened. So the SEC can still go against them, but I don't think they would have as much.
Because no one lost money. People were happy.
Exactly. It's kind of a benefit for the market. And the reason I say that is, at the time, they were already running a deficit. and they haven't been making money for a long time before that. And even if they did,
That's not necessarily true, but
I mean, but what I was going to say, even if they did, it was short lived. So sure, they may have pulled money, but sure they may have brought profits or had intangible assets that can make up for it. But we're talking about like grand scheme, big picture, they're incurring a loss.
Well, so
Yeah.
right now the biggest question with that company is, and not whether or not they're profiting off of their vehicles, because they've scaled production reasonably
With their mega factories.
to a certain extent. They have scaled production, and they're getting record sales numbers right now, and they're profiting off of each vehicle. The question is not so much the profit, but more so the loans and the amount of money they own and who they own to.
Right.
When those loans will default and how much money they owe and how much it's going to cost them and by what point.
Well,
That's why they
yeah.
consider. That's why you see articles like Tesla might go bankrupt by the end of 2019 or something, because they're still selling cars and they're making money off of every single car. It's just a matter of how much money they owe.
Well, and that's why I'm not saying that's why I'm saying they're not really pulling in profit or strong revenues, is because most of it is leveraged.
Yeah.
So I mean, even if they are, it's like you're paying back like 80% of that, and then the 20% you keep, you're distributing to the investors. So you're so heavily leveraged that it gets you thinking, like, why are they staying in business? At what point does it really make sense for them to just pull out? And I mean, when they were offering to go private, I thought that might be a good idea, and I'm pretty sure other people in the markets were thinking this might be in our favor, because I think Tesla would be better as a private company, because they'd be more free. They wouldn't have any obligations tied to the stock market or the general investors. They would have their obligations tied into their goals, their missions, what they want to do.
So,
like SpaceX. SpaceX wastes tons of money by throwing before they started doing the rocket, the capsule recovery.
Yeah.
They were just shooting them off, and it's like, oh, blew up. Well, let's build another one. Blew up. Let's build another one.
I wouldn't say it's like they're hoping for the best, though. They have some frame of reference to go off of. But yeah.
Right,
Just
yeah.
shoot a rocket into space and, kind of hope that your team did a good job.
Exactly. And it's like, that asset's gone forever, because there it goes, sailing into space. But you know what? You're private. You don't have an obligation. You're like, cool, milestone achieved, on to the next step.
Buy a Roadster.
Yeah, you're right.
Like Elon says as he launches his car.
Yeah, he's throwing everything into space.
You know what? As a tech nerd, I gotta say, when they first started recovering their rockets, that was the freaking coolest thing ever. Because at that point, I knew they were going to be launching rockets into space every other week. After that moment, once they started recovering their rockets, that was it. You're set for space discovery for the next however many years. You're going to be setting satellites everywhere and everything. I don't know. I just really think that concept is cool, but it is a lot of money.
It is, and that's why I'm glad SpaceX is private. I'm glad that they're doing their own thing. Now also keep in mind, the trade-off of not going public is, if you're a company that requires a lot of capitalization, most companies go public because they can issue stocks and in return get a bunch of money, and then return that money into the investment, into the business, and then reinvest it, and now they can produce more from it. That's the theory. But some businesses don't implement it correctly. They might overcharge their stock, and now they have all this money and all this obligation to the investors. They don't reinvest it correctly, and the stock decreases. Now you're losing all this money, and you have too many obligations.
So I have a question, and maybe it's to do with my lack of experience. But once you've issued stock to the public, and your company has gone public, how does it work when you take your company private? What happens to all the people who already own, say, 1 share of your company, or 10, or 100 shares of your company?
There's a general price. When the company is sold or going private, they have to buy all that back. When you issue stock, you have to buy it back.
So, say I, as an investor in Tesla, had, 100 shares. That's $42,000 if they were to hit their price target of $420.
Yeah.
Would I just get sent?
You buy everything back for $420 per share.
So I just find $42,000 in my account, and that was it. I wouldn't own Tesla shares anymore.
Yeah. You would have to sell it.
I would have to sell it, or they have
you're pretty much forced to sell.
Interesting.
Because if you think about then again, if you own a microscopic amount in a company, you would probably be forced to sell. Now, if you were a major shareholder, I would say that they would probably conduct board meetings and they would make sure everyone was on board. Because keep in mind, their obligations extend further than just the general investors. They also have investors who own like 10% or even 5%.
I was
That's a
about to
huge
say,
stake.
like,
Okay,
that was actually the exact percent I was going to say. Like, what if someone owns 5% of Tesla?
What if I
That's
own,
when
like,
Tesla would have
private?
to talk to them.
Yeah.
Tesla would have to talk to them and say, like, look, we're planning on selling out. Do you want to stay on board? Because sometimes, like Facebook, when they were developing, they issued stocks, but they weren't public, right? The founders were like, remember, that's what he got sued over. Remember when they went public and they diluted the stocks, the initial founders did not get diluted except for that one dude, but I can't remember his name. He doesn't matter anymore because he's not a part of Facebook, but it was one of the founders. His stock got diluted to 0.01 or 0.001. It was really bad.
Damn.
And everyone else was still at 2%, 3%. They still had a lot of equity. So
They paid people in equity, actually.
they did, really?
Yeah, they actually paid a artist in equity
Interesting.
to do murals in the Facebook office. when that opened.
EA does it. EA does that. Like my dad, he gets stock sometimes. It's like a form of payment. It's a pay option, like a stock option.
Oh, that's really
Yeah, you can get a portion.
Honestly, in scaling companies like EA, in your case, I would
Makes
definitely
sense.
take those stocks. Yeah, that's awesome.
I mean, you gotta think long term here. If you're working for the company for 20 years, I mean, it makes sense. Take the option. Even if you don't work there for 20 years, just hang on. It's a free stock. Hang on to it. Hang on.
Well, it's either take the stock or take the money. I'd rather take I mean, I guess it depends on your situation. If you really need the money.
Well, you can do a percent mix. Like, they're not going to pay you all in stocks because, I mean, obviously you can't. So you need to pay for your house or your food. You got to pay for something. But
Can I pay my mortgage in stocks?
that'd be interesting.
That'd be interesting. If the government started dealing with trading, that'd be a wild ride there.
And that'd be a little concerning. That's where free market is now getting mixed with government, and we've learned that that's not really a good mix in many cases.
Oh right. So to mention something.
David Cho. That was the artist's name.
Oh,
Who
interesting.
worked with Facebook and got a decent percentage or a decent amount of stocks from Facebook for his murals. And then once Facebook went public,
Yeah.
became a millionaire. I know this because I've watched him on Anthony Bourdain's show, and also I recently applied for a position that he posted on LinkedIn.
Really?
So,
Oh,
yeah.
hey. Oh, there you go, man. Go for it. Go for the stars. That's interesting. Dang, and he turned into a millionaire. Yeah, I mean, stock options are a good idea. They're not, you just got to get it with the right business. EA, I think, is one of those right businesses to get that stock option from.
Maybe I don't know about right now. Well, maybe since they've took a hit
They're
a little
still
bit recently, right?
very
It's not
profitable.
that bad of an idea right now.
I mean, keep in mind, they're still relative because they do own a lot of brand names. I mean, The Sims, although aren't doing very well, it's still an iconic
profitable.
name. Yeah, I mean, that
EA
is...
Sports is still huge.
That too.
I
Yeah,
saw
the sports
something.
section.
I saw something interesting that really caught my attention, which was gamers nationwide all sort of refer to EA as the enemy right now because of all the microtransactions and DLC and all this other crap that they've been like forcing upon their customers.
Right.
And they went public asking why people think they're the enemy, and that was just really interesting. I started seeing people making jokes about it online, posting videos making fun of them, and that's crazy. That the general census of their customer base refers to them as their enemy or the enemy. How they're
so
still
bad.
making so much money. How people still buy their games. They still make good games, But
Well, this is where I think, in terms of the video games industry, I feel like that the people who kind of rag on EA or boycott EA games or the practices are actually just a vocal minority. I feel like the vast majority of people either don't care or aren't vocal or will just buy those games because they're loyal to the franchise.
I would disagree with you. I don't think they're a minority in this case. The reason why
You think it's a majority of the world?
the reason why Bungie was sold from Activision is this is a different company, but the reason why Bungie was sold from Activision is because Bungie was fed up with Activision Blizzard's practices of establishing ridiculous timelines, requiring mandatory DLC, including in-game purchases and other things, microtransactions that people don't like. And Bungie is a huge company, and they split from Activision for that exact same reason. That's not a small amount of people that dislike these practices about EA and other big companies out there that sell video games and stuff. It's really not a minority at this point. Well, a lot of people have issues with this problem.
You know, I agree a lot of people have issues, but still, I think I might side a bit more with Sarkis in this case, that I don't think it's the majority. And the reason I think that is because the sales speak for themselves. You know, you were just saying, right, I don't know why they're still having high sales. Well, I think that's kind of the proof in the pudding. You know, I think a lot of people are fed up with it, but it's one of those things where, damn, I really hate this, but I'm still going to buy it. You know, type of scenario. And now I agree with you. I think it's soon going to turn into the majority. I think it's on the path to becoming that way because over time we are seeing EA games slowly go down in sales revenue because we're not seeing an upwards curve. We're seeing a bit of plateauing, couple dips. They have a couple flops that happened in the
other
last
companies
year.
are going to cut into their market share and
big time
take their customers away.
Yeah, they're going to bleed. But you know, I was also thinking, just talking about this, right? Deadlines, timelines, you know, the cash flows. As with any company, right? Going, you know, talking about cold storage to all the way to like basic storefront to your games, which are digital now. The biggest thing with them is these companies want to make money. They're making games to make money. They're providing a good that people want so that they in turn can get a profit. The problem is when someone buys a video game, right? Let's go back to like 2004. When I bought a video game and that company made millions of dollars, the game was low budget. Right? They're not spending $700 million.
Yeah.
They're spending like $5 million to make George in the Jungle, you know, like platformer game on PlayStation 2. And you're like, damn, this is a great game. And you buy it for, you know, $50, $40, whatever. And X amount of people buy it, you make millions of dollars. That's a huge turnover. Going from a $2 million budget game to having like $20 million in revenue. You know, and that's continual. But keep in mind, when someone buys that product, it's not like they're paying monthly to keep it. It's bought. It's done. You know, and at some point you have to do something. And I think when you have games that are higher budget, you need to have more places of revenue, more points of revenue, and a revenue stream of some sort for the positive cash flow, or else you'll bleed. You know, what game was it that has the highest thing? We were just talking about last week.
The new Halo Infinity that's coming out is the most expensive game ever developed with a budget of $750 million.
Right.
Yeah.
So see, they're going to have to bank, and I think they will. I think they'll hit their numbers, but they're going to have to bank on mass revenue.
But now to like go back against it, in 2004 when Halo 2 came out, so this was literally 15 years ago.
Yeah.
Halo 2's budget was $212 million. Total cost, you know what? Oh, I'm sorry. Total cost $120, and then $212 million scaled with inflation. So $120 million it cost in 2004 to develop Halo 2, compared to 15 years down the line, where it's one of the biggest games in the world right now, or one of the biggest franchises in the world. Cost them $750 million to develop.
Well, but I mean, I think that kind of proves my point that it's more expensive. They need more points of revenue.
Well, it's a much bigger, much more complicated game now than back then.
There's also the continual cost after development. After you release a game, particularly if there's a strong online component, you have to pay for all those servers, which is quite costly.
You have to maintain those servers.
Well, that's a different story. That was Xbox Live, and you would pay $5 a month for Xbox Live. So that's outside of the cost of Halo 2.
Well, no. There would still be a cost. Well, it wouldn't be a direct cost to the project, but I'm talking about the company. So when we're talking about individual...
Bungie has their own set budget, and then Microsoft, who owns the Xbox, sets a budget for Xbox Live, and
I know that's what I'm saying. That's what I'm saying.
I know, but at the time, Bungie's budget was separate from Microsoft's budget for Xbox Live. It's not. It corresponds, but it's not directly related.
But we're not talking about like budget sheet. We're not talking about whether or not that company has to set aside money for it. We're talking about the umbrella company pushing deadlines because they have to have a point of revenue and a positive cash flow, which is why companies like Activision and companies like EA are pushing these hardcore deadlines and making DLCs mandatory and loot boxes and all this bull crap that I agree I hate. But from a business end, I get it. I get it. If I was in their shoes, I would be thinking the same thing. Like, you know what? We're only getting like a 2% return from our $500 million budgeted game, and we're struggling out there.
Yeah.
Because remember,
this new Star Wars Battlefront, like we have to maintain all those servers for all the PC clients, and we're going to be losing money after a certain point.
Right.
Our sales won't be able to recoup whatever our losses are.
Right, and when people buy the game, they're not paying monthly for the game. That game's bought, acquired, you got the $60 for it, boom, that's it.
It's not World of Warcraft.
Exactly. Now, see, World of Warcraft is a completely different story. Blizzard probably made freaking bank off of World of Warcraft. Like, dude, bank. The first
every month
subscription. Dude.
Every month they probably make. They're in the green every single month.
Yeah. And there's a reason why Blizzard is still so incredibly relevant, is probably because they just have so much freaking capital that they can stay in the game.
That might not be so much the case anymore because they're partnered with Activision, the parent company at the moment. They didn't make Blizzard, but they're tied together at the moment.
Yeah.
And Activision's decisions hurt Blizzard significantly because oftentimes they'll impose their own deadlines and certain things on Blizzard that Blizzard wasn't always used to.
Right.
Before they would come out with, say, an expansion for World of Warcraft, which would be an extra $30 or $40 game, not including the cost of the monthly fee, the $5 subscription fee for World of Warcraft every 4 years or something. And then in comes Activision, and they're all of a sudden demanding a lot more in a much faster timeline, and they think that people go out of their way to spend even more money to get relatively the same amount of content as they did before.
Right. No, I get that. I mean, more or less, I'm just thinking. So Blizzard might not be used to that, but then again, maybe the consumer market was shifting and changing. I mean, had Blizzard not been captivated, I mean, who knows? Blizzard may have gone under at some point. I mean, the market shifts and changes. Like, subscription-based stuff. There's a reason why... I mean, World of Warcraft is still well played. But, I mean, obviously, the subscriptions are going down and down and down and down. And at some point, it's going to die.
Of course.
I mean, and that's what I'm thinking is... at some point, these smaller companies that might not be able to survive a mass shift in the market is going to have to go under an umbrella until they can readjust. Like what Bungie did. Bungie was umbrella for a period of time until they understood how the market shifted, how the market worked. They're like, perfect, we're pulling out now. Which is smart. Because the market will go through different changes.
No, they changed ownerships due to issues with the parent companies.
But that's what I'm saying. So the changes that the parent companies introduced was more contributed or attributed to the shift in the market. So what players are looking for, what players want, the consistency, quality, the amount of budget you need in the game, the timelines, all the deadlines. The market probably completely shifted compared to 2004 to 2014, the 10-year span. You probably had a huge change in demographics. You had a huge change in consumption, huge change in console distribution and usage and market share value. I mean, the parent company was probably under a lot of pressure to start imposing these shifts, and as a result, subordinate companies begin to break away.
Yeah, but then 5 to 10 years down the line, the exact same thing happened all over again.
Yeah, but that's what I'm saying. It's a cyclical economy. That's how it works.
Yeah, that's fair, I guess.
I mean, retail's the same way. Trends change, fashion changes. If you're a small fashion chain that banked off of one trend and that trend ends and you're not captivated by another company setting another trend, you're probably going to sink.
I guess Activision didn't learn anything from Microsoft when Bungie split ways the first time with Microsoft.
Yeah.
They split ways with Activision for the exact same reason.
Yeah, and now that Bungie has the learning curve, Bungie understands the market shift, and Bungie probably left at a good opportunity where they're like, look, I think we have enough capital to survive another shift, and I think we can start getting some of our own knowledge in there. and as a result become a cornerstone company.
I wonder if they're ever gonna go public or get bought out by another public company again. Like, what do you think is the future of that company? They're private equity at this point now.
Yeah, they're private. I don't know. That's a good question.
That is a good question.
They could go either way, depending on how valuable they are, or they could sink. That's always an option too.
I mean, they could always publish independently. They have enough of a following and enough of a kind of a name to themselves.
I mean, Microsoft owns
Bungie game.
Microsoft owns Bungie's former biggest platform, Halo. 363 Studios is producing the most expensive game of all time. What's Bungie doing? I think the budget for the first Destiny game was in like the $100-something million. It was a big game. They made money off of it, but it's no Halo.
It doesn't need to be a Halo, though. You don't need to achieve the same amount of success as that thing that made you
sure, but
massive.
Yeah, but
to
10-year difference. When did Destiny 2? Destiny 1 came... Oh, okay, so this is perfect. Halo 2 came out 2004. Destiny came out exactly 10 years later. Halo 2's budget was $212 million in today's money, so $120 million in the money of yesteryear. And then 2014, exactly 10 years later, they released Destiny, which has a budget of $140 million. Their budget didn't really change all that much in 10 years difference. You would think the company has grown since then.
Well, also keep in mind, like, the cost to produce certain games to a certain quality probably went down. So like $100 million valued quality from 2004 is probably a lot different than what $100 million of a budget in 2014 can get you.
I guess if you're not reinventing the game every time, you're using game engines and stuff. But,
right. They had experience. They had market knowledge. They kind of knew how to replicate it, but in a way that was unique. And in this case, Destiny was unique. It had that sci-fi edge that Halo introduced, but it's not Halo, it's Destiny. They did a really good job rebranding.
But they did come out with a new game engine and a new style of game, and you might have seen similar games before, but it's not like it's a totally different game. It's more of like an open world. You have a lot more to do.
There is a good point where, because of the experience they've gathered, they can really cut down on the cost of production, but because they've kind of already been there, done that. They know what steps to take, and so any of the they know how to kind of optimize the process of game creation.
Right, they're more efficient.
Yeah, they're more efficient. And on top of that, I don't know if they actually did they use a totally different engine for Destiny as opposed to a previous Halo game?
Well, as far as shooters go, not necessarily. It's the same shooter style game, but you have a larger open world, you have more maps, you've introduced other concepts like...
Because if they did use a similar or the same engine as maybe one of the previous games that they developed, that could also really significantly cut down on the cost of the development.
So a big part of the game was quite similar to their former games, because at the end of the day, you still have like this sci-fi type shooter game, first-person shooter, but you have differences like open worlds, adding quests, different worlds that you're constantly going back and forth between, and these little mechanics they're not super complicated to develop, because you've seen so many other companies do similar games, but you're mixing and matching a lot of concepts that they haven't done before. So it might have not been new, but it was new to them.
Yeah, that's true.
So you still have to consider the development cost to make something like that, because you're not borrowing someone else's technology, someone else's software. You're doing it yourself. So you still have to consider the cost of developing these new mechanics and these new technicalities.
I mean, the good thing about doing that is that it adds value. So I mean, it's good that they're venturing into that regardless, because you're developing assets pretty much, engines and that type of stuff. Those are all software patents, intangibles that they can use as contract material, or even collateral.
So then, as far as investments go, would you think that that sort of growth is sustainable in the long run? Because they don't necessarily have technology, they don't have anything that they could sell off. Everything that they have is concepts.
Oh, no. Yeah, it's
Conceptual.
still long term. It's still long term. I mean, for example, pharmaceutical companies. Up and coming pharmaceutical companies have to go through 4 phases to get their drugs approved. Bear in mind, the average time span, the waiting time to get your drug approved, it's like 10 years, dude. 10 years, and that's the average. Okay, that's the average. On the long run, some drugs take 20 years for the FDA to go through, and that's if you don't lobby. That's if you don't pay them off to continue to push it through. It takes time. And the worst part about it is if you can't pass, let's just say you go to phase 1, 2, 3, you're finally in phase 4, and your drug gets denied, everything you were doing for that drug goes into the shitter. It's still valuable as research, but there's no, you can't sell it. So now you have to send it back to R&D and go through the whole process again. And the reason I bring that up is like video games. Sure, it's concept, sure, it's patents, but it's R&D nonetheless. It's discovery, it's new, they're trying something new. And there's still value in that. Now, the question is what value does it hold? A lot of those values are subjective. So like what I may find valuable in an intangible asset, like a patent, you might not find valuable at all. Like if I have a patent for like a robot that can do gardening and only gardening, and you're an industrial miner, you see no value in that patent. So when you're trying to buy me out, you're probably going to lowball me. You're probably not going to be like, oh, you deserve a premium.
It also depends on how relevant your patents are, because patents take a long time to expire. If it came out, a long enough period of time ago, it could have been outdated at this point, and you might still have value for it because you might still continue to use it. But if it's out of date, someone has come up with something new or more efficient.
But patents are linked to products. That's another key thing.
Sure.
So let's just say that the patent's 10 years old, but the product that the patent is linked to is still widely used in today's society. Upon acquiring it, the patent might not be very valuable, but everything linked to the patent is. So the patent's cheap, but the company itself will be pricey. I mean that's why the intangible assets are subjective in value, because a company can easily say, oh yeah, you want to buy that? Well, we have like 30 different products that we developed using this patent that use that technology, and if you're going to buy the patent, you know what, you're going to have access to producing all these goods. I'm going to make you pay market value for all of our goods against a premium. You're going to make it more expensive. So I think that's what gives it its tangible value.
Or you could leverage your patents for royalties and sell it out.
I mean, you could. Yeah, you can. I mean, intangibles are good leverage tools only because it's subjective. You can leverage really well with it.
Sometime in the past, we've seen certain game development companies sell their services to help produce software or program things for other companies that need a helping hand. And so oftentimes they'll actually go out of their way, make an extra few bucks helping someone else out, produce something, develop something, write some code, improve something. And oftentimes you'll see that's quite actually beneficial, because companies that have had 20 years in the industry, 30 years in the industry, who have had a lot of experience programming, developing, will know how, or have the know-how better than, say, a company that's new to the industry who just started out.
Ultimate Engine, correct?
Yeah.
Yeah. That's id Industries, or which development?
That one was...
that's id.
Oh, hey, before I forget, let's bust out that chalkboard bottle of wine.
I haven't even finished my first cup.
Here, pass that and let me cork that open here.
Oh, it's not a cork, it's a screw top.
That's convenient.
That's a lot more convenient. Yeah, so if anyone doesn't know, the Ultimate Engine is basically a game engine that's used by quite a few different games. It is developed by, I believe it was a development company called id. I actually can look it up right now, just double check. But basically, they've been around. This company has been around in the game industry for a long time, and they license out their game engine to various other developers, even though they might technically be considered competitors, because they can make a very good profit off of selling to others in the industry.
Well, I mean, freelance contracts with any type of software company is incredibly common. I mean,
yeah.
When you're running a deficit because you don't have any major projects going on, at that point you're just like, okay, look, we need to get something on the table here. We got to do something. I mean, yeah, I think that goes for any type of like contractor, freelance work, or anyone who works with pretty much anything like a physical service.
Well,
You're always going to be freelancing something to make a revenue.
in the case of freelancing in the industries like gaming, I think it's actually kind of interesting because it sort of levels the playing field when it comes to competition. Because oftentimes you'll see that companies will learn from other companies who freelance and help them. Like, for instance, they can learn a thing or two from their programming on how to avoid certain issues. Are you considering the Unreal Engine?
Unreal. I'm sorry.
That might have been what
Ultimate
it was.
Engine. Oh my god.
Yeah, Unreal.
Yeah, Unreal Engine.
Jesus. Yeah, that was my mistake. Unreal Engine, not Ultimate Engine. Jesus. And that is developed by Epic Games. Sorry, yeah, it's Epic Games that developed the Unreal Engine, which they license out to various other developers.
Right, so you'll see that oftentimes companies will learn from other companies' programming and other companies' technologies because they're sharing this information openly through, joint projects.
Right.
Whereas you have companies that have tangible assets and, physical hardware that they don't necessarily share, like the tech industry. When one company comes up with a design for a product that another company obviously wants to use or copy but can't do so, they won't work with each other. Then you have companies like joint ventures, like, for instance, this is a totally different example, but Toyota and BMW, they developed their most recent sports car, the Toyota Supra, where Toyota reached out to BMW and used one of their straight six engines, because BMW has a lot of experience developing these straight six engines, and they've been around in the straight six industry for quite a while. They have a lot of experience doing so, and they have a modular setup where they can constantly change and modify really small aspects of the engine to fit the specific purpose. So they have a straight six engine for every aspect, from small cars to big cars to sports cars, you name it. And Toyota reaches out to them because they have such a wide range of options to choose from, but they're not necessarily, that's a joint venture where they're not necessarily sharing information, they're sharing products. What does Toyota have to learn from BMW from using their engine? They'd rather develop their own engine, but it costs a lot of money and time, and then you have to develop a whole new warehouse to put it, and you might not want to do that. Whereas you have, Bungie working together, selling their programming to a smaller company that's just up and coming, then these smaller companies can have a lot to benefit from learning from the efficiency of these bigger companies. So it's kind of like it's a two-way trade-off. You sell your services, but then other people catch up to you in terms of tech. Like, what's to say that smaller company that you helped out with won't all of a sudden catch up to you and bite you in the butt when they become your next main competitor?
Well, you know what? I have the answer to that. The things that set businesses apart, other than, of course, differentiation and the low-cost values that they implement in their business strategies, is whether or not a business can easily replicate, right? Even though you might have a partnership with something, doesn't mean you can replicate it. Even if you learn how it works, and even if you do learn how to replicate it, you might not have the capabilities to do so. That's the key thing, right? I mean, like, for example, if Hershey's learns another chocolate company's recipe, it doesn't mean Hershey's has the opportunity to replicate it. They might not have the power to do it or the occupancy or the capacity to do it. Which is why these partnerships are great, because companies can take that risk of, oh my god, they're going to learn our trade secret, but who cares? They won't be able to replicate, they won't be able to build another similar thing, because if they can, at that point, it becomes common knowledge. If a company can replicate it, then it's not unique, it's not non-replicable, it's a replicated product.
Yeah.
Which means now it's going to become a common product on the market. So that's why, you can run that risk, because some companies just aren't capable of doing it. Can't replicate.
So then, in the case of Toyota and BMW, the joint project, Toyota using BMW's engine in the new Toyota sports car called the Supra. It's their 5th generation of Supra. It's like their high-end sports car that people have been looking for ages.
Yeah.
And they've been developing this car for a very, very long time. Why do they choose BMW? BMW has a long history with straight six engines. The biggest deal was the modular engine design, meaning it can be scaled proportionately for the task at hand. meaning they can change that engine design depending on what they need it for. They have straight six variants that are non-turbocharged. They have straight six variants that are. They have straight six variants that are diesel. And
Really?
they have diesel six-cylinder engines as well. And there's tons of differences between one 3-liter twin-charged twin-scroll turbo 6 turbocharged 6-cylinder versus the next turbocharged 6-cylinder. Like for instance, the car that shares the engine with the Supra is the BMW Z4, which has a 3-liter turbocharged 6-cylinder engine. But the beefier version of the same engine is in the M3, which makes a lot more horsepower. And it's scaled because it's a modular engine design. It's the B-series engines that they're making where they can change, valve diameter or piston stroke or, size of the turbo that goes with it, And ultimately, these engines are all pretty much the same thing with minor differences.
Right.
So then, but then you can't get companies like Toyota to copy it no matter how much they try. Because they don't want to develop another factory. They can. 20 years ago, the Mark IV Toyota Supra, previous to the current generation Supra, had a twin-turbo straight-six engine. Why did they choose BMW? Because they wanted to stick with the same style of engine. So Toyota was, at some point, king of this engine. That's become one of the most legendary engines in the car world. But they don't want to go out of their way and develop with, all new cost this straight-six engine all over again like they did in the past. It costs a lot of time and a lot of money. So, as it could be replicatable, but sometimes it doesn't even make sense. How much would it make sense for the small game developer to try and replicate what Bungie is doing? What if they learn that Bungie's methods are inefficient?
Well, yeah, and that's why these partnerships exist is because of that replicable aspect. Just some companies just have no profit in replicating. There's no point.
It's a lot cheaper to work with someone who already knows what they're doing than to start from the ground up on your own.
Yeah. That's why partnerships exist. You got specialties on all end, and sometimes you want to use those specialties together to create like a super product or a beefier product, and as a result,
a super product, like Nvidia's super graphics cards.
Super graphics card. Yeah, that's true.
Oh man, I don't think I'm ever gonna stop slamming certain companies for their naming schemes. Nvidia's the worst. The worst.
Sarkis is our marketer here. Name branding is pretty big.
Did I mention why
they're really crap at that sort of thing? So it just confuses consumers, and you have to end up consulting like charts and graphs of like, okay, what's the best component to buy for my particular build or whatever.
Did I ever mention why Nvidia officially named the 1600 series graphics cards what they did?
No, actually, I don't.
So basically, they had the 10 series graphics cards. It was the 1060, 1070, 1070 Ti, 1080, 1080 Ti. Then they came out with the next generation of RTX cards, the 2060, 2070, 2080, and 2080 Ti. Then they came out with like a mid-grade consumer card that was like a kind of budget-oriented but still decent, and it was the 1660 and 1660 Ti after the 20 series, after the 10 series, and their official explanation, it's not an exact quote, but this is pretty much a good summary of it, was that it's more powerful than the 10 series, but not as powerful as the 20 series, but closer to the 20 series than the 10 series, so it had to be more than 1500 and more than 1100, so they went with 1600, but because their low-end 20 series card was a 2060, they didn't want to go over 1660, so they called it the 1660 and the 1660 Ti, which are sub RTX 2060. Now, if any of that actually makes sense to you, you should get a job from Nvidia, because I have no idea what the hell it is that they're talking about or why they went with that naming scheme.
That explanation alone is pretty confusing.
Any consumer, from a consumer point of view, you hear 1660 and you think, oh, that's like a really old graphics card. They're already in like the 20 series.
They're 4 generations behind.
Yeah, why would I ever buy this? And why is this so expensive? And it just causes confusion among your customers. In terms of a marketer, that's just a headache.
Well, in that sense, the 2080 Ti must be 10 years ahead of time, or 10 generations ahead of time with the 1080 Ti, right? But that's literally last generation.
See, this is why I'm in finance and not marketing, man. I can't do that.
See, this is why I'm in mechanical engineering and not finance or marketing. I can't do any of that. Man, someone needs to replace them on that. Like, they need some better marketing on their end. They need a better naming scheme. They
Actually,
gotta figure it out.
I'm kind of curious on their end if they have a marketing firm working for them, or do they just do it all in house?
So
if they're just doing it in house, which I mean, I don't know what marketing firm would recommend them naming some of their newer products to 1600 series, even though they're on the 20 series.
Hey,
I want to know if they have a marketing firm that's working for them.
Yeah.
And if not, they should.
That's true. Yeah. I mean, who knows? They might have like some third parties for marketing, but I doubt it. I think they do a lot of things in house. I mean, it's just cheaper.
Speaking of bad naming schemes, I really hope it's just a rumor, but there have been leaks online or rumors going around online that Intel's new series of processors. So they've sort of been going. Their naming scheme has been pretty consistent and decent for the last however many years. Each generation is the next 1000 series. So they went from 4000 to 5000, 6, 7, 8, 9. Now, but they started to get a bit ridiculous. Like, their most high-end CPU that they came out with was the i9-9990XE, which had a lot of 9s. There's rumors going around that the next generation of processors is the i7 10700 or 10900 or something. And at this point, it's just becoming like a mouthful, and they should really I don't know, I really hope it's just rumors, because that's just becoming a mouthful. Like, making a product with the longest name in the world isn't necessarily a good thing. I'm a car guy, and I remember there being a Subaru that came out a couple years back. It was the Subaru Impreza WRX STI, which is the standard name for the STI, but then they added some other things to it. It was the Spec C Type RA Nürburgring edition. So you have the Subaru Impreza WRX STI Spec C Type RA Nürburgring edition. That's literally one name for a single car. That's the longest thing I've ever heard on planet Earth for a car name.
Yeah, it's a pretty long car name.
Yeah, that's pretty bad.
And it's like some special edition of the car where the car only came out in like the orange color and had a couple of modifications to it for like, your car guy who wants some cooler stuff on there. But I mean, who the hell is going to remember this name? Jesus.
It's called the Nürburgring.
Cut it short. Just call it the STI Nürburgring edition.
Yeah.
We don't need all this other crap. Intel, get your shit together. Nvidia, get your shit together.
Yeah, it's all marketing. I mean,
or maybe lack of marketing.
It's probably the lack of marketing.
It's seriously, a lack of marketing.
It's closer to the 20 series, but further from the 10 series. But because it's a little closer to the 20 series, it has to be more than 1500. Yeah. Yo, just make a goddamn name for it.
Yeah, this is why I kind of think that my hunch is that they are doing it more in a in-house marketing rather than hiring a firm or any sort of like a consultant for their marketing needs. Because if they had a firm, they would kind of correct them and be like, maybe let's go with this other naming scheme for your new upcoming product.
Yeah, you would think they would have like a quality control of some sort to make sure they don't name something kind of weird or off, but
yeah,
not everyone has that sort of quality control.
Or just run some like consumer surveys and some tests. Just put some consumers down and give them some surveys. Maybe hand out some like I don't know, like a gift card or something to like TGI Fridays for answering the survey, and just try to gauge responses from there and figure out, what is the best naming strategy for your new product.
Right.
So there is something I actually want to discuss because we're not too far off topic from it. Is last week I mentioned AMD coming out with some new products, and I wanted to do a slight evaluation of the new products and see what we think. At the end of the last episode, I mentioned that AMD had a release of a couple of new CPUs and GPUs at the exact same time. They came out with the RX 5700 and RX 5700 XT GPUs, and on the exact same day also released a new processor lineup of the AMD Ryzen 9, Ryzen 7, and Ryzen 5 3000 editions. The Ryzen 9 being the 3900X at $500, and you have the lower end models of like the Ryzen 5 down to 3600 and 3600X at the $200 and $250 price range. And so I wanted to discuss these products because they really hit a certain price target and performance target in the market where you needed it most for solid competition. NVIDIA, respectively, came out with, they previously had the 2060, the RTX 2060 graphics cards and the RTX 2070 graphics cards, and just before AMD's launch, surprise released the super variants of the graphics cards, which I mentioned before, and put them in at a competitive price point. And to compete equally so, AMD lowered their price point just before the launch of the graphics cards. They lowered their price points $50, so the 5700 ended up being at $349 MSRP, and the 5700 XT ended up being at $399. And when they launched, competed with the 2060 Super and the 2070 Super variants, respectively. And you see that they were within the same price points, and they sort of outcompeted. AMD kind of outcompeted NVIDIA with raw performance, but is sort of lacking on features like ray tracing and DLSS, which is that's a different story. It has to do with like correction of the image and so on. And so there's a couple of different features that they are lacking in, and I wanted to sort of get an idea of the value of AMD over their competition, because I mentioned them so much and I was kind of on the hype train. Now, I still think AMD is a solid player in the game right now. They're doing really well. They came out with some tech that's definitely inciting some serious competition. In the CPU game, you have single-threaded performance, single-core performance. I'm sorry, not single-threaded. Single-core performance in direct competition with Intel's similarly priced CPUs. They're doing really well for themselves. And multi-core performance, they're getting blows back and forth. AMD in one game and Intel in another. And it's really interesting to see that whereas AMD was a company that sort of was always on the back end trying to play catch-up, is finally hit a certain point in the game where they're a strong player. And then that's in both industries, both in the graphics card world and the CPU world. And it's so I wanted to break down like price, like are they worth it? What are we looking at in terms of value? Just before this podcast, Mike and I had a small conversation about AMD. We saw that AMD might have been overvalued, but there's a lot of firms saying that it's still a buy.
Yeah. I mean, it's possible to still be overvalued in a buy, only because the speculation is that the company is going to grow beyond the overvalued point that everyone seems to think it is. And keep in mind, like when we looked at the overvaluation, like the valuation meter, it was only overvalued by $1. So it's not too bad considering what their current running price is. I guess more or less the concern is, can they maintain this sense of competition that they've just spurred up together? Because, historically speaking, this isn't typical AMD behavior. This is a new venture that AMD is now getting into, where they're going to directly compete hardcore, like a legit war on the market.
No, I wouldn't say that. They were kings at some point in time, like 15 years ago, where they ruled the industry. They've come out with some really influential technologies in the past that, influenced the competitors significantly.
Yeah.
I wouldn't say that they have never been leader in their industry before.
Well, I didn't say they're not leaders. I didn't say they're not leaders. I just said that they're not fierce competitors.
They were at some point.
But now they're not. Well, that's why I'm saying that, because a fierce competitor would never just stop being a fierce competitor. That's why I'm saying NVIDIA, Intel, those companies have maintained fierce competition because they have 24/7 around the clock, around the day, all the time.
Yeah.
And AMD let up, that, and finally they're reigniting that spur. And 15 years ago, right? I mean, if we're talking about like market share value as well, I'm pretty sure AMD's commandeering more market share today than they did 15 years ago. I mean, if they were fierce competitors, they probably wouldn't have weathered that horrible storm they had about a year ago. They had a pretty bad storm, and not to mention their growth rate was really bad before that storm. I mean, but now I agree. AMD is definitely on that train for growth. How sustainable it is, that's the question. Is how sustainable is it really? Because we would have to do a further analysis into like physical assets, how many factories and locations do they have. That type of stuff is what you're going to need for the analysis, at least just on the hard, like full value end of AMD. Because let's just say Intel has more factories and more flexibility and capabilities, that's going to put up a really hard fight against AMD big time. And if NVIDIA has the same thing, that's also going to be a very big fight because, AMD is going to have to fight on two fronts, and we're going to have to watch out for that.
So AMD, we talked about this a while back. Is that last year they did a lot of buybacks and they sort of reinvested a lot of their capital into newer technologies and increasing in their production for modular designs, and they had a lot of help from companies like TSMC who helped with their chip production. And so I mean a lot of that stuff really does help with long-term sustainability, but it's a matter of they're not the only ones doing it.
Yeah, I mean they're definitely going to have the competition they already have are experienced just as they are, have a lot of capital. This type of consumer war is definitely going to have some cost, but the good thing on the consumer end is that we're going to get some crazy high-tech stuff coming soon. Now, how widespread will it be? How many people will be able to acquire it? Probably not many. It's probably going to be slow to go to full implementation in terms of like everyday people. But we're going to see some pretty massive, impressive outcomes to this tech war. So, which is really good for all of us.
So typically, years and years and years ago, it was considered that every year or every next generation of products you would come out with would typically double in capacity and speed and compared to the previous generation. And over the last 10 years or so, Moore's Law, and over the last 10 years or so, companies like Intel and AMD and NVIDIA really, really wish that would have been the case, because that's sort of not the case anymore. Now they're fighting for 5 and 10% every here and there. Yeah. But it's kind of crazy how much of a gap AMD has between their 2nd-gen Ryzen processors and their 3rd-gen Ryzen processors, or even their graphics cards, like their Navi graphics cards, which are the current RX 5700 and 5700 XT. The gap between that generation and the previous generation of RX 570, 580, and 590 is huge. It's, closer to Moore's Law than it is that 5% gap. And it's strange because that doesn't happen often. So you're not going to see growth on that scale happen, the next year or the year after. It really depends on how competition driven they are, how much cash flow they have, and how much investors are confident in their ability to continue to expand in such a speed. It's I don't know, like how how possible is it to continue to scale at a certain growth? It hasn't happened like this in a long time.
Well, I mean, I think this is kind of the spur to the horse type of scenario where now they're going to have to. They're going to have to figure something out.
I guess I'm asking, like, is this just like a one-time surge? Is this something that only happens every so often? Or is this something that they can continue to scale at, like, you know, go back to Moore's Law where they double every year or something, or every generation of products?
I mean, we're in a slump right now. And I think that was because, as mentioned in the second episode, NVIDIA was kind of king for a bit, was able to just kind of sit on its back and kind of just do anything. But, you know, with more competition, it pushes the race forward.
Well, yeah, with no competition, you could charge whatever you want for your graphics card. You can charge whatever you want for your products with no competition telling you otherwise. And you sort of have massive profit margins without really increasing in performance from generation to generation.
You cut down on your cost of R&D.
Yeah, we saw that with NVIDIA. From the 9th generation GTX card to the 10th generation GTX cards, they weren't that much more improvement over the previous generation that it might have been worth it to buy those cards. Honestly, certain cards were just being not rebranded, so to say, but you know, they might as well have been, because they were just charging more money for almost the same product. It might have been more efficient to just buy a used card or buy multiple used cards for the same price of a new card and, you know, get very nearly the same or better price to performance ratio.
Yeah. Right.
It's yeah, so I mean, competition definitely incites a lot of that, helps with, you know, moving forward in R&D and stuff, because NVIDIA isn't just sitting around anymore. They wouldn't have come out with those super cards had it not been for AMD.
Right. Now they're getting those the competition is spurred. You know, now they're kind of in that zone where they're gonna have to start coming out with more innovative products. A lot more new.
So I like AMD's new products. You know, they definitely price to performance ratio for raw performance have a great value and even sentiment. You know, a lot of people who might have been Intel fanboys in the past or something are now looking to their options over on the other side because the products are really competitive. But you know, it depends on features and stuff like that. Like, you know, they're not full industry kings, but I do still like the direction that they're taking, their modular designs, and they listen to the people that talk to them and that suggest, you know, we need this and we need that, and they respond. That's a big deal. It's not all companies respond to their customer base.
Yeah, no, that's true. That's very true.
So I've covered most of my points today.
Yeah, I mean, I think that
pretty much is going to cover most of our points today.
Yeah.
Maybe just to slightly touch upon something I posted this week before, like a day or two ago, was a follow-up to a discussion we had in episode 2 about investing into the cannabis industry.
Yes.
Stocks and such. So it's still, yes, it's still federally illegal. And it's still, for anyone that is considering to invest into the cannabis industry, either stocks or starting their own business, just know that politics is going to play a much larger role in your probably day-to-day risk in operations, particularly what administration is in control at that time. Thankfully, right now the current administration is fairly lenient and isn't really focusing on cracking down on too many cannabis industries, especially in states that have legalized it.
But I haven't seen much negative news in terms of them, like, really putting down that stuff. Yeah.
But that again can change, you know, a year from now, 2 years from now, depending on who's in power, who's in charge.
That's true.
So those are all kind of factors that if you are considering in getting involved in the cannabis industry, you need to consider. You need to weigh those options.
I mean, typically the Republicans, the more conservative side, don't necessarily approve as much for topics like marijuana, yet they haven't really focused on it or said anything negative on it because they've seen that it's a huge industry that a lot of money can be made from it.
A lot of tax money can be made from it.
I don't actually, because the other side that is less likely to approve of it isn't disapproving of it. You might see a trend of good news or no news, and I think it's less likely that you'll see anything negative impacting this industry for the time being.
Recently, a good bit of news is actually within a week, like Hawaii has decriminalized marijuana.
Yeah,
in their state. So the good news is it's looking positive, but it's still not federally 100% legalized. Yeah. So things can change. The future is not certain. It's still a risk, so it's just a risk that you have to really consider before you make that leap.
So and another thing too is that I don't think the conversation of marijuana is really a hot button topic anymore, to be very honest, in the fields of politics. I mean, just like listening to the platforms and stuff that is discussed today, I don't think voters really care that much about marijuana than some of the other movements that are going on right now. I think that's why a lot of politicians aren't discussing it as fervently.
I mean, in some of the big states like California, where it was a serious proposal, it became recreationally legal statewide.
Yeah.
Now that huge public, or that huge portion of the public is satiated with the state laws, they aren't necessarily pushing for it in federal laws.
I think it'll just default at some point. Like, the federal government's probably just going to be like, you know what, it's been going on all this time, there's no point in having this law. We won't legalize it, but we won't make it illegal. It'll just be in the country. It'll be still taxable, but it's something that the government's not going to enforce. It's just something that's there.
I hope the trend continues, because that'd be pretty solid for the industry there.
It'll be good. I think it's good competition against alcohol, too. Because, I mean, alcohol has been a cornerstone commodity for a long, long time, and marijuana is going to be one of those things that can compete against it.
I guess it'll be a competitor, but also a lot of alcohol companies are already looking and investing into the marijuana.
In the cannabis-infused alcohols, I've seen that.
Yeah. Heineken is getting involved, Lagunitas is getting involved. Who was it? I believe it was Corona, if I remember correctly, is also getting involved in creating basically beer that is 0% alcohol but it has THC in it.
Maybe that's less of a competing industry and more of like a joint kind of both industries combining into one sort of thing.
Yeah,
it's possible.
A joint industry, yes.
Symbiotic industries.
Well, yeah, I mean,
it's like hot dogs and hot dog buns. You know, those things are going to go together. They're complementary goods.
You don't hugely sell one without the other.
No, I mean marijuana and alcohol. I mean, if you go to like college parties, I mean both are present.
Sure, but you only have one at a bar. You know, you don't
for now.
Yeah, you don't see bars selling joints. You don't go to the local restaurant and ask for a joint. You get a beer. You know.
Well, it's like hookah lounges. You know, maybe there's going to be like pot lounges. Everyone's just getting high.
That is actually a trend that it's. Overseas, it was already a trend in Amsterdam with cafes.
Oh, the cafes.
But that is a trend that is emerging in legalized states like Colorado. It's also some lounges and cafes are going to be opening up in Nevada, if I'm not mistaken. So that is a kind of an emerging trend of kind of spaces where you can indulge in marijuana, particularly smoking, because. Even though marijuana is legalized, it is still the laws of smoking in public areas is still applicable. So having those sort of spaces where you have lounges and cafes where you can smoke is still very, very important.
I mean, it's going to be a whole new market, which will be nice. You know, you're going to see some new business proprietors pop up. It's just one of those industries that just creates new potential for everyone to kind of venture out into something new and organic and rich into the country right now in terms of consumer end products. You know, so yeah, I mean, I don't really see much of the downfall you would get from just letting this thing take its course and operate. You know, I mean, alcohol's bad for you, but people... I mean, we're drinking it right now. Like, it doesn't stop people from doing it, as we discussed in episode 2, you know, speakeasies and shit. It doesn't end, so...
Yeah.
You know, we might as well just let people do what they want to do, and, you know, it's like one of those willful consequences, you know? You're doing it because you know what the side effect is, you know what the consequence is, but... You know, we're here for a good time, not a long time, right?
You know what?
We're enjoying it.
I have a political question in this case. Is should the government be allowed to involve themselves in personal ethics? Because a government is there to make sure that, you know, people don't go around killing each other, and that, you know, people don't go around screwing each other over left and right. So you have laws to do with businesses that, you know, stop them from, you know, screwing each other over. You have laws that, you know, establish a society so that people don't go around shooting someone every time they disagree with you.
Right, it's not anarchical.
Yeah. Now, should they be allowed to decide that drugs are illegal, or that, you know, for instance, fireworks? Like, I can see that fireworks can be a danger because they can be considered weapons. You know, you shoot it off, it burns something down, someone gets injured, whatever. But say, for instance, personal ethics, like... it's getting into really hot topics like abortion. Like, that's just ethics, you know? One side thinks, oh, we shouldn't do this, and the other side thinks, oh, we should do this. But, I mean, it comes down to ethics. Is why does the government involve themselves with people's everyday lives?
Well,
I
mean, for me personally, I think it's whatever, like, let people do whatever they want. My only thing is I don't want to pay for people to do things, like... I just feel like people should pay for all their own things. I mean, that's why this whole podcast exists, is, you know, fiscal responsibility. If people was responsible with their money, we wouldn't need as much, like, public support, public funding, because everything would be based off of market value prices, which would equalize. For example, like, you know, hospitals, those types of places, I mean, it's because they're so heavily subsidized that they're so super expensive. Because remember what I was talking about last week is college tuition, right? As soon as FAFSA became a thing, college tuitions went up. Why? Because the captivation zone has increased. Because now I can increase my tuition to not only get your money that you were already paying, but also that $3,000 you're getting paid. So instead of $6,000, I'm going to do $9,000 so that you still pay $6,000, but I get your FAFSA.
So in this industry, does it make sense for the government to start offering financial aid if it doesn't really assist you as much as they think it does?
The thing is
they're all ethics questions. Like, why should they get involved?
Well, that's the thing. It's the idea that someone kind of deludes another individual or a group of individuals into thinking that this is a long-term assistant type of thing. Because, you know, Social Security was created as a response to Hoovervilles and the mass depression that we had. We created social programs to help stimulate the economy again. Remember, and everyone listening, you have to understand, you know, public health care, public anything in this country, Social Security, you know, unemployment benefits, that shit never existed until post-depression. And it was actually supposed to be temporary. Every single one of those laws was supposed to be temporary. But it was because that a slow dependency was built on it, and it was because that now we saw, oh, it does affect the economy. And for a time, it was positive. For a time, it was positive. It was like, you know what, if someone's unemployed to get some benefits, we believe that they're going to go back into the market. And at the time, most people did, because they're like, you know, look, I got to, like, get my pants on, I got to get out there, I got to go work. But as each era progressed forward, it changed. Work ethic changed, mindset changed. And these what were temporary programs are now not temporary. As a result, creates moral hazard, ethical hazard. Yeah. Everyone's paying for everyone's thing, and it's just one of those things where now you begin to question, you know, why am I paying for someone else's stuff?
They've become standards, and a lot of people have become reliant on it so much so that it's become difficult to change or remove.
Right.
Yeah, so then you're introduced into the concepts of a socialist government where everyone is paying for each other's stuff, and everyone has questions on, why should I pay for their insurance? Why should I pay for his medical bill? Why should I, you know, cover someone else's faults of you know, no fault of my own, you know?
And the thing with medicine too is preventive care and that type of stuff, I'm more than happy to contribute towards, because that benefits all of society. Because if I can help get one less person sick, that means other people will not get sick, which means the odds of a mass outbreak of some crazy-ass illness won't happen, which is why I'm okay with the public funding of flu shots. Totally fine with that. I don't want the flu to be rampant. I don't want people to get sick. I'm cool with that. Preventive care, more than happy to fund it. Only because preventive care is cheap. It's easy to produce. It's easy to distribute.
And it's effective.
It's very effective. It's a societal gain. Preventive care is a societal gain. Now, when you look at like individual operations, or if you look at, for example, body augmentation, if you're doing like plastic surgery as an optional,
an elective surgery,
right? You shouldn't be able to dip into public funds, which some people can.
Okay, now say, what if I asked you how you felt about, say, for instance, the weight loss elective surgery? Should the public cover this? Insurance considers weight loss surgeries to be more beneficial over a long period of time because it's cheaper to pay for the surgery than it is to pay for the long-term negative side effects of being overweight, like, for instance, diabetes, high blood pressure, and that sort.
Well, let's go to the source of it, though. I mean, preventive care, or just teach better dieting.
This isn't preventative care. This is already a response to a current issue.
No, I get that, but I'm saying by investing more into preventative care, so I'm okay with paying for those people, yes, but we should invest more onto the preventative care side to even prevent that from occurring. Like the obesity level from even reaching the point where now we need to pay for those people to have those surgeries. You get what I'm saying?
Yeah.
So we create, for example, like when we were growing up, we all learned like the six, the food groups, right? We got our dairies and our the pyramid, and we're like, yay, like we need to eat our fruits and veggies. Yeah. We don't really have that emphasis today, and as even our generation did not have that emphasis growing up. We had it, but we weren't like really pushing it and practicing it. We would take a day to learn about healthy diets and balanced meals, and then we go next door to McDonald's and we get ourselves a, big old meal, But I mean, going back to what you said, I'm okay with paying for those people to get those surgeries and those assistance because, again, I believe it's a societal benefit. Those people are at risk or in danger, and it does put other people at risk at times because it's expensive to upkeep. So, but at the same time, we should try to prevent that from even happening.
The thing about this is that these insurance companies have already deemed it more beneficial to pay for the surgery up front than to pay for the long-term cost. Meaning, if you have an insurance policy that covers that you pay for, it is very likely that it will cover this sort of a cost already as it is. So my question is that should a thing like this be subsidized? Should the public have to pay for it, or should you just have the insurance companies deal with it themselves? They're already dealing with it regardless. People who are overweight, who struggle with weight loss issues, and they're probably going to deal with this, and insurance is going to cover it whether it's subsidized or not. The question is that, like, stuff like this that you consider preventative do you charge the public for it? Do you tax the public for it, or do you tell insurance, deal with it yourself? Because then it becomes a matter of ethics of where your preventative care stops. Do you stop at flu shots? How far do you go? Do you consider the weight loss part of the same preventative assistance as flu shots? To prevent people from dying left and right for certain things, or do you go full scale and cover everything, or do you just?
I mean, preventative care, I don't think really has much of an ethical argument, only because the bounds of preventive care is to prevent people from even becoming afflicted.
Sure, but the real question is, at what point do you stop? How much of it do you subsidize?
Well,
just like you, I'm all for paying for other people's flu shots because I don't want the flu myself, and I'm part of the society.
Yeah, you don't want to get sick.
Yeah,
but I mean, I'm not going to get sick because you were really, really fat and you needed to lose some weight and get some surgery.
True, but for example, it puts a strain on EMS. Right? I mean, a fat person has a higher chance of getting stroke, heart attack, all the cardiac arrest. If one of them has it happen, and now an ambulance is called, the ambulance is now taking out of the EMS system, meaning that if someone else who maybe was not under any type of infliction is involved with, let's just say, a car accident, what if we don't have enough ambulance to respond to what should be considered an accident rather than a preventable medical emergency? You know what I'm talking about, like the long-term effect here. So like the more people we have that are obese, the more of a strain we're going to have on EMS, the more of a strain we're going to have in hospital care, hospice care even, because I mean you're going to have more wheelchairs, you're going to have more accessibility cost. So I mean, as a whole, you know, having a highly obese population is probably not in the society's best interest. You know, now what should we pay for? How much will it cost? I think that's where we enter the question of what's the best treatment. Is the treatment go straight to surgery, make it the fastest that, or is the fastest getting them in touch with a nutritionist, and as time goes on help them do dieting? Because keep in mind, even if we give them the surgery, if they revert back to their old ways, they can just gain it back. And in fact, they can take on unhealthier tendencies too. I've done a little bit of research on like not lap band surgery, but surgery or liposuction. That's what it is, where they just like suck out all the fat. Unfortunately, it doesn't really solve the problem because you suck the fat out. That person's diet and their mindset hasn't fully changed. At least some of them, not most, but some, and they revert to their same diet and unfortunately gain it back. Now, that's the problem. You know, we want to have a solution, not this like temporary milestone where, hey, we solved it temporarily, but you're going to go back to it in 5 years.
So,
you know,
this brings to point another valid question with this industry is that it's not always in the hospitals or insurance companies' best interest to cure you for your solution. For your problem.
Mm-hmm. Absolutely.
Because at the end of the day, healthcare and hospitals are just another business. Same as schools that you know, same as all these other industries where you think that they're on your side and they're only there to help you. That's not true. They're there to make money too.
You cannot be more correct.
And it doesn't always make sense to cure someone as it does to treat someone, because treating them takes a lot longer and makes a lot more money.
See, bear in mind too, like malpractice cases are super high in the U.S. This is something I didn't know as of a couple of years ago, but we have a really high malpractice rate. Like a lot of people die in surgeries and in operations, and even like minor things. You know, like a wisdom tooth removal. There's a malpractice rate in that, in which they get an infection and die from that. Now, bear in mind, sometimes they get the infection themselves because they're not following the cleaning practices and whatnot. And yes, you can die from having your wisdom teeth removed and having a mass infection, because those are giant, gaping, open wounds in a mouth where you're getting bacteria and shit in there constantly.
You know, this is actually something I never thought about. This is news to me.
Yeah, no, malpractice is high. And in very simple operations, too. Very simple. It can even go as far as implementing a shot incorrectly and having a little bit of air in the syringe, and as a result, an air bubble is in your vessel, goes to your heart, pops, and you die.
Well, those are a high concern in IVs.
Yeah.
If you're administering in an IV, you have to be very, very sure there's no air bubbles within your IV.
Absolutely.
Or that can be lethal to your patient.
And that's the problem. And that coincides with the idea that, you know, these places are operating more like businesses than they are as facilities. Because the business end, you know, they're just like, look, we just need the nurse. Look, we just need the doctor. Look, we just need someone there to do it. Okay? Hey, you're a junior doctor. You just graduated from medical school. Great. We have an opening. We'll just have you shadow our chief whatever doctor, and then after a week you're good. Just go ahead and start like diagnosing. You'll catch on. You're good. You're good.
You know what's a good counteract to that is quality control.
Yes.
That's really important.
I mean, they need to have more of it.
I don't think there's enough quality control.
They have none. Yeah, they have
high accountability.
Mm-hmm.
So not only would, if there is a malpractice case, not only would the person who, like, not only would the doctor get in trouble, but the hospital gets in trouble. Yeah. And every other, like, the managers get in trouble. Everyone that kind of led to that mistake being made.
So oftentimes you'll see quality control come from one company or the other working with each other. Like, for instance, a hospital has to provide certain information to the insurance company for the insurance company to pay out. So the hospital maintains a minimum level of quality control for the insurance company to approve of the work that they did to get paid. Yeah. But what happens when the hospital and the insurance company are the same company? Like, for instance, Kaiser. They provide their own insurance.
HMO?
Yeah.
Yes. That's a very good point. And going back to my insurance class, that's exactly what they do.
Yeah.
Is a hospital organization, so like a medical group, will be like, all right, you know what, we're done dealing with other people's insurances. We're just gonna build our own. A captive is what we call it. A captive insurance company. And I have Kaiser, and I'll be honest, I love Kaiser. I got zero issues with Kaiser. I mean, dude, everything I do through Kaiser is great. Now, bear in mind, I'm not endorsing Kaiser to everyone. I personally like Kaiser. I've had zero issues with them.
On the other hand, I was with them for a long time, and I had to leave.
You had to leave? Why? What happened?
Well, it was issues with surgery and surgeons requiring minimal requirements that were just impossible, and and so they pretty much.
What were the requirements? I'm curious. What were
they pretty much refused to do the surgery because they required for you to be healthy prior to the surgery.
Now see, do you know why they have that though? It's
Why?
to reduce their malpractice rate. Because the more healthy you are, the more likely you are to survive the operation.
Yeah, but if you were healthy, you wouldn't be going into that surgery.
Not necessarily. I mean, some people do have like medical conditions that cause them to just gain weight rapidly, but they can still maintain like healthy bone structure, a healthy blood level.
I mean, I guess it depends from surgery to surgery.
Hypothyroid, I believe.
Hypothyroidism,
I guess it depends from surgery to surgery. Every patient is different, but in my case, they refused me the surgery, and we had to change because although it was an elected surgery, their requirements were too damn high. And
did they have a white blood cell count by any chance? Where they took a sample of your blood, ran it, and looked at.
No, I don't think so. No.
Did they do blood work though on you?
Of course, they did. I mean, every hospital you go to prior to surgery wants a lot of blood work done. They want to know.
I'll be honest. I think they did that in hemoglobin in your blood. I'm pretty
probably,
sure.
But that wasn't the requirement that I had issues with. That's more of a personal matter, anyways. But
well, it might have, but I mean that can contribute to like the healthy idea. Because if your blood cell and your hemoglobin levels are low, they're going to have complications while they're operating on you in surgery. There's going to be other things they have to consider. So, like, if you have a low white blood cell count and you get an infection, you might die.
Well, of course, listen.
And if you have a low hemoglobin level, you're not going to be able to produce enough blood.
As far as businesses go, they're still doctors, so they still have a minimum requirement. They're not just going to do anyone for any surgery, period.
Right.
If you're past the point of no return, say for instance your blood is incredibly thin, and once they put you under and they cut you open, your blood doesn't stop flowing. If they can't control that and you bleed out in the middle of the table, they're not going to want to do surgery on you ahead of time. That makes sense. But like for instance, in the case of say a weight loss surgery, if they want you to lose a fuck ton of weight before you go into the surgery because it helps shrink your liver a certain amount, and you can't, you're going to this weight loss surgery to lose the weight and you can't do it yourself. What's to say that they just say sorry, we won't do the surgery on you?
I mean, it also ventures into the idea of loss control. I mean, that's what most companies will do, is if they see a risk being too high, or if they see that they have a chance to mitigate it but the chances are too slim, or the options aren't viable, then they'll say no. I mean, insurance companies do that constantly because it's subjective to each their own, so that's why a lot of companies are going to be using loss control as like a way to prevent, it's loss control. You're trying to prevent losses from happening. And loss control, I mean, of course, can be on the financial end of trying not to lose money or, lose a property. But at the same time, loss control can be used for like hospitals so you don't lose a life. I think more or less that's what they're practicing. Now, I agree that could bring like ethical questions in, discrimination based off of X, Y, and Z. But at the end of the day, if they're rationalizing it with like actual like documentation and paperwork that's based off of a standard that they hold to, then I guess I can kind of understand why they don't want to do it. But I mean, I can tell for you, that must have been kind of a shitty scenario to have to venture through. Especially, I'm sure you had to go through a lot of hoops with them too.
So I mean, ultimately, I ended up just changing insurance companies, and some had lower standards, and I wouldn't really say it's backfired on that company. Like I've had no issues. Everything was really smooth, and after my surgery, everything was great, and I haven't really looked back on it yet. And it's been a couple of years already, and so I guess it just goes from person to person. But like these kind of, I wouldn't really call it discrimination because I'm one race or another, or
That's not what I meant.
Or because
like
I
health.
have like one health issue over another. I went into one company with the same issue that I did with another company, whereas one company said, yeah, let's do it. Another company said, nah, you don't meet our requirements.
Well, like some companies, depending on like a certain risk level, they won't operate on. For example, like cancer, some hospitals have like a percentage where if you have a certain percentage of cancer, it's like, well, you're dead.
So
you're
before
done.
I left Kaiser, they wanted me to continue with a certain program that they had that cost me money. Then they wanted me to continue to run blood tests and other tests throughout the process of running that program.
Yeah.
And they wanted me to stick around for another 6 months to a year and just pay them a boatload of money, including deductibles and other fees and stuff.
What was the program?
Prior to that surgery, they had a dietitian and other people run you through that program where they would teach you about it, but I'd already run through the whole program.
Yeah.
They wanted me to continue to do blood work throughout the process. They wanted me to continue to come in and do check-ins and constantly pay, the copay fee whenever you come in, and constantly pay for more blood work and more testing. And throughout the whole next year, they said, listen, like, don't stop this process, you're on a good process, but you got to do this and that and this and that.
Yeah.
And they were pretty much trying to get me to out of pocket an absurd amount of money before I actually go into this procedure. Whereas with the other company, we just they accepted the blood work and all the tests from Kaiser and said, we won't even make you run through those tests at all. You've already done all the testing. We already have all the information. They sent over the packet with all the info about blood work and stuff like that. We'll even accept the fact that you did classes elsewhere and you don't have to take the same classes and education with us.
Yeah.
We'll just throw you straight into the front of the line.
Hmm.
And that's the difference between the private insurance company that worked with whoever with private practice surgeon compared to the HMO where Kaiser wanted me to continue their program and raise their standards and pay them more amount of money both for insurance, and they had a higher deductible than I did with the other company. And that's the one thing I don't understand, is that you would think that private practice you'd have a higher deductible. But for me, it was the opposite, for instance.
Because privates specialize in certain things. HMOs is everything, which is why deductibles will always be higher in an HMO.
Well, in addition to that, they wanted to basically continue to charge and fee everything, whereas, with private practice, I just kind of jumped the line. They said, yeah, you're good. You already meet all of our requirements. Let's go. Let's do it right now.
I mean, like, I can rationalize the behavior a little bit, just because I can see what they're trying to do. Now, how long they were doing it, how much they were requesting from it, I can understand being pricey. But I think more or less what they're aiming to do is just making sure that 100% you are solid, not going to retrograde. You know what I mean? Like, anyone can get the surgery. It's maintaining the results of the surgery that's most important. And I mean, I get like the price and the expense, and I agree. I agree, like, that is pricey. And if you could do the surgery and have the discipline to maintain it yourself post, then I think it's in your best interest to leave. But I think with most people who do deal, with weight loss, if they retrograde back, then they're going to have to get the surgery again. And I think that's what Kaiser might be trying to prevent, is you retrograding, going back, and then as a result having to go back to the surgery.
I don't know. I think if they once they educated you and they saw that you're prepared, they would just pull you into that surgery. In the instance of Kaiser being that, at least in my case anyways, they sort of seeing that you probably don't think too far off along the lines of most people, is that if you can justify the means of delaying the surgery to further educate them to make sure that they don't fall back on their old ways, then it makes sense to hold them longer and charge them more money. But it's precisely because of this reason that I think Kaiser is able to do these things and get away with it, is that because you can sort of justify their logic so they can continue to charge you more money before they throw you into this expensive surgery. They're trying to recover costs from one way or another, because at the end of the day it is their own insurance company covering that surgery. So they would rather charge you more money ahead of time to make up for the cost. Whereas with private practice, I I was in right away. They didn't deny me. They didn't question it. They sort of saw that I had already gone through this, and they're like, yeah, you're good. Let's go.
I mean, I think it's just one of those things where it's like to each their own. I think for you have a higher practice of discipline. I think there are a lot of other people out there who might not. And I agree with you. Kaiser will bank on it, and I agree they might abuse that system, but at the same time, I feel like there's also going to be people out there who literally have to have that nutritionist or...
Well, they do. They require classes one way or another. Private practice, they did require a class. They just saw that because I already gone through it, they won't require it a second time. And so they're not going to charge me for it, even though I've already paid for it to somebody else. I paid their competition, that money. Yeah. But it's not so much the question of my results. It's more so the question of because people can sort of agree with their logic that they can charge more over a longer period of time and just say, you need more education. And then you'll say, yeah, that makes sense. And then you'll just pay them more money and continue the education.
I think what would be best for this type of discussion would be to have a result chart of how many people have retrograded post-surgery and then the amount of prep time.
Like how many people have relapsed their original weights or regained all that weight back after surgery.
Yeah.
And how many have kind of stayed the course.
Exactly. If we see high correlation between relapse to lack of prep, then I would say Kaiser probably has the benefit of the doubt. But if we see lack of correlation, then I would say you're probably more on the valid end than to believe Kaiser would be would be kind of I don't want to say jipping, but maybe overusing or abusing that system of
overvaluing.
Overvaluing, right? Overvaluing it. But again, I think we need more statistics, more research on that.
Yeah, that might be worth looking into. I remember my uncle had a similar issue with weight loss, and he also got the more severe surgery, and it ended up being that he did regain some weight and had to redo one of his surgeries. It helped him more so the second time around, but I think it was after like 2, maybe 3 years that he regained a significant portion of his weight, that it wasn't sustainable for him, that he had to find an insurance company that was willing to deal with him again and re-educate him and redo the whole process on someone who was, already previously had work. That's kind of a big deal. It becomes a liability at that point, is you've already had surgery before, you have a history of being unhealthy and continuing it. Is, do we continue to cover the cost of the surgery for you, knowing that you might get back into it?
Yeah.
Yeah.
Yeah, that makes sense.
I think this is where we're gonna kind of wrap up episode 3.
Yeah.
Yeah. I mean, we've had a pretty damn good discussions today. I feel. We touched on some of the topics that we talked about previously in our last episodes. Touched on some new topics today. If you guys have any thoughts, opinions, questions, anything like that, don't be afraid to reach out through email, Reddit, Instagram, Twitter. We'll have that Discord set up soon.
Please, yes. Yeah. Post on our Reddit. Send us an email with questions, topics, whatever you want to cover. Comment. If you have something that you didn't like that we mentioned, if you wanted to mention something yourself, post a comment to talk about it. We have discussion threads that we started posting on our Reddit for each episode. So anything you want to go over or review, we'll be there. We'll be commenting. We'll be reading everything.
Exactly. I mean, emphasizing episode 1 and 2, I've pretty much always closed with it. We're here to learn. The only way we can learn is by having that two-way dialogue. And you guys are going to have perspective. You guys are going to have ideas that either agree or disagree with us. And we need those. We need the feedback because that's what the discussion is. We have to have everyone talking. And as long as we keep talking, we're going to keep learning. We're going to keep getting that knowledge base. So, good luck. Happy investing. And we'll see you on our next podcast for episode 4. We'll see you then.
All right. Financial Decapitation out.
Bye.
All right. I think Sarkis had to pee.